I think we're well on our way, though. I mean, Saylor and Madeira said, that this is the golden age of Bitcoin. I think he's right. I think in the next 10 years, we're going to see a really big change, a really big shift. And that doesn't mean the dollar's going to fail. That doesn't mean fiat's going to go away. That doesn't mean central banks are going to be put out of business. I think they'll all still be here. But the balance of power is going to shift very substantially in the favor of sound money, in my opinion, in the next 5 or 10 years.
Equity Management Associates founder Lawrence Lepard believes that Bitcoin's price will skyrocket soon, and here's why. Currently, only a small percentage of people understand and invest in Bitcoin. Lepard estimates this group to be about 10% of the developed world. Much like the internet and cell phones, which initially faced resistance due to being perceived as clunky and expensive, Bitcoin is also encountering skepticism and pushback. Some people hesitate to buy Bitcoin at its current price, thinking they missed the opportunity when it was cheaper. However, Lepard sees Bitcoin's current price as a bargain compared to its future worth. He believes that as Bitcoin becomes widely adopted, its value will significantly increase, similar to how cell phones became widely used and affordable over time. Meanwhile, an article on CoinDesk states that choppiness will likely persist despite Bitcoin rebounding towards $60,000. Marcus Thielen from 10x Research suggests that while Bitcoin may climb to $60,000, this rise will be temporary due to technical damage. He predicts another decline to the low $50,000 range, creating a challenging trading environment. Additionally, K33 Research estimates that between 75,000 to 118,000 BTC, worth $4.3 billion to $6.8 billion, will be sold during the summer. This selling pressure is expected to impact Bitcoin's performance until October, leading to choppy market conditions. Now let's hear more from Lawrence Lepard's interview.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
I don't know, when the internet was introduced, how did people wake up to that? I mean, there were those of us who were in it early, who knew what it was, who were excited about it, who realized it was going to change the world. But, at the time, my 70-year-old mother at the time was like, why the hell do I need this? And she wasn't going to get a modem and dial up and link into the internet. But, maybe 10 years later, when all her kids had it, we were emailing each other and she wasn't on the email list. She said, hey, set me up in this internet thing. I mean, it's word of mouth and it's penetration and knowledge on the part of the populace, right? And so, I figure there are probably about 10% of us who kind of get it or are aware of it. Maybe it's even less than that, but let's generously say maybe 10% of the developed world is kind of involved in this whole trade and in this area. And so, we're going to get to 90%. And, if you use the Gladwell theory of the tipping point, it took us 15 years to get here, in another 15 years, we'll be at 90%. And, I saw this with cell phones. I mean, the first cell phones came out, they were clunky. It was 40 cents a minute. Only the richest of the rich had them, and they make 5-minute calls, but they really needed to make those calls, so they paid for them. Well, now we all have cell phones. Calls are almost free. The monthly charge is de minimis for somebody who's doing reasonably well. And this is how technology works, right? It starts off as being a little clunky and a little misunderstood, and people are resistant to it. A lot of people are like, it's magic internet money. When you get all the normal pushback, but over time, they come to see that, hey, hang on a second. That thing you bought has gone up a lot. And that thing doesn't, this is an asset. This is something that if I buy, I can get a good return on it. We're encountering some of that right now. The thing we're having to overcome is that a lot of people are looking at it and say, okay, I get it. I like the thesis. You're probably even right. But gosh, how can I pay $60,000 when you bought it so much cheaper? And what I'm trying to convince them is that, well, it was like, how could I pay, $2,000 or $300 or $500, whatever I started buying it, when Max Kaiser bought it for $2 million. And someday, your grandkids will be buying, the price of Bitcoin will be $2 million, $3 million a coin. And they'll be saying, hang on a second, you mean to tell me you were buying a whole Bitcoin for $60,000 in 2024? Oh my God, how did that happen? So, it's kind of a cumulative thing as it gets adopted. My view is anybody who wants to support this new invention, which I believe is going to change and improve the world, as well as go up a lot in price. But forgetting all of that, I really want to see the world get fixed, because I think the world is terribly broken as a result of the lack of sound money and living in the fiat system that we live in. I mean, I'm writing my quarterly letter for the June quarter, and I just have a chart in there that shows, the wealth distribution. And I mean, I don't know if you're aware of this, but in the United States, 1% of the people own 50% of the wealth. I mean, and that's up 10x from the 80s. So, I mean, this used to be a country with a middle class, and there were people who did very well, and there were people who weren't doing so well, but the broad majority of the people did okay. And it's really kind of getting divided into a haves and have-not society, and that has all kinds of negative social implications in terms of politics and anger and unfairness and so on and so forth. And so that's what really bothers me, and that's the biggest change I've seen in my lifetime. That I think I grew up in a country that, while not perfect, we were fighting the Vietnam War when I was growing up, was a lot more balanced economically than it is today. It wasn't the oligarchs and then, the rest of us.
Transitioning from the current system to one centered around Bitcoin and sound money will take time and effort. Lawrence Lepard admits he was previously overly optimistic about the speed of this change, but remains confident that significant shifts will occur within the next decade. He agrees with Michael Saylor's assessment that we are entering the golden age of Bitcoin, expecting substantial changes and a shift in the balance of power towards sound money. However, Lepard clarifies that this shift does not mean the immediate end of the dollar, fiat currencies, or central banks. Instead, he anticipates that these entities will still exist, but their influence and power will diminish in favor of sound money principles as Bitcoin gains prominence and acceptance. Now, let's get back to what Lawrence Lepard has to say.
The money is broken, as we were talking about before the show, and that's been a long process. It started with the creation of fractional reserve banking, the Federal Reserve. It continued throughout the 20th century and culminated in the gold standard being abandoned by Nixon in '71. And it's just kind of gotten cumulatively worse and worse and worse. And, now I think we're really in the point where it's becoming more apparent to everybody, and events are accelerating. So it's more important than ever if you're trying to save money, save it in things that the government can't print. And Bitcoin is probably the best choice. And gold and silver are not bad choices behind Bitcoin. I think Stein's law applies, which says that, if something cannot go on forever, it'll end. I mean, the math is against them. They can't grow debt at a rate in excess of the rate of growth of GDP without eventually having the interest costs on the debt, create a crisis. And but you're right. I mean, it's gone on longer than it should have, and it could go on for another 5 or 10 years. Some people think longer. I kind of don't. I think we're going to come to a head here, in the next 5 or 10 years. But I also thought that it was going to be conclusive in 2008, and they managed to kick the can there. They've now taken it up to the sovereign currency level. I mean, we had a dot-com bubble, we had a housing bubble, now we've got a sovereign currency bubble. And the way the government finances are set up, we continue to spend more than we bring in tax revenue, and therefore the debt is growing, and therefore as interest rates go up, the interest costs are growing. And it's, as James Lavish has so well pointed out in all his work, we're in a debt death doom loop where, higher interest rates require, bigger deficits, which means you got to sell more debt. Selling the same amount of more debt into the same amount of demand means higher interest rates, and winch, rush, repeat. Right? I mean, it's a vicious negative feedback loop, and I think we're getting to the point where the can kicking is going to get very, very hard. I mean, right now we're in an interim period where we had a lot of money printed in the COVID example, and they've managed to kind of slow that down somewhat and tighten up a little bit by reducing the Fed balance sheet from 9 to 7 trillion I'm talking about. But, eventually something else is going to break and the system will not have enough money in it to function. And they'll be faced with a choice that they're always faced with, which is, print money to keep the system going, knowing that the risk of that is inflation, or don't print money and let everything collapse, knowing that looks something like 1929. And we know what they're going to choose because we've seen them choose it for 100 years. They chose it in Silicon Valley Bank. They chose it in 2008. They chose it with COVID. They chose it with LTCM way back in 1998. I mean, I've seen all of these in my career, and they just keep choosing the same thing. And and the excuse they'll use is the one they used in '08. I mean, Henry Paulson went to Nancy Pelosi, got on his knees, and said, "Look, if you don't give us this $700 billion for TARP, the ATMs aren't going to work tomorrow." They kind of have a gun to your head and they threaten, the Armageddon of the financial system unless you print. And guess what? The politicians put into that condition, in those circumstances, they will print. So we know they will print. And I think in the next print, the Fed balance sheet goes to 20 trillion. And the thing that's important here, Sean, is that with each of these events, more and more people are coming to see it. A lot of people saw it in '71 and there was a big run in gold then. And, a lot of the hard money people got it, but they managed to contain that by raising interest rates very high, and they could do that because sovereign debt was a small percentage of total GDP. Let things go in the other direction, and it just keeps getting cumulatively bigger. So, to timing, I think we're going to see fireworks in the next 5 years, and I personally can't see how this system holds together more than 10 years. So, I think we're on a sound money standard, or we have hyperbitcoinization, sometime between now and 2034, which is not a trivial amount of time, but it's not another 20, 30, 40 years. With each of these cycles, the problem is getting more acute. You know what I mean? So that's kind of how I handicap it. And that would fit in with the fourth turning theory. This is a fourth turning, which is a kind of a change in the rules of society, which it's described in a book of the same name. Most people know the theory. And the last one was World War II. The one before that was the Civil War. And the one before that was the American Revolution. These are in the United States anyway. And I think the topic of this fourth turning is going to be, what is money? As Robert Breedlove kind of brilliantly named his series. For 2,000 years, we've had the problem of monetary inflation. The Romans had it, and every country and government since that time has had the problem, even to a degree when they were on the gold standard, because the supply of gold grows at 1.7% a year, which that means you compound that. That means the amount of gold that we hold in the world doubles every 40 years. Monetary inflation and monetary debasement is a problem that's existed for thousands and thousands of years. And that's why the invention of Bitcoin is such an amazingly significant technological innovation, because it takes this couple thousand-year-old problem and just puts an end to it. We are not going to have, if we all rely on a distributed ledger with a fixed supply, we are not going to have monetary inflation, full stop.
Lepard suggests that in times of crisis, the government always prints more money to avoid financial collapse, citing historical examples like the 2008 financial crisis, the COVID-19 pandemic, and various banking crises. He predicts that the Federal Reserve's balance sheet could balloon to $2 trillion in the next financial crisis. Lepard anticipates significant economic upheaval within the next 5 to 10 years, leading to a shift towards a sound money standard involving Bitcoin. He describes Bitcoin as a revolutionary technology that can solve the age-old problem of monetary inflation and debasement. Lepard connects this potential shift to the concept of the fourth turning, a period of major societal change, suggesting that the central issue will be the nature of money itself. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.